What do you think is the big bear case that the popular finance people are saying now on Twitter and YouTube about Palantir? Like obviously the street is with us. We got a $37 price target upgrade this week, but what do you think is the big argument around why it's overvalued, why, this thing is going to crash and burn? What is the sentiment out there right now for you on the bear case?
I can tell you the real bear case I see right now. I really struggle to see a real bear case right now.
Me too.
Both on...
And real quick, before you continue, you and me saying this matters. We're not saying this is delusional bulls, because we have been super bearish about the valuation for a very long time, you and me both personally. Mm-hmm. And so if we both say, hey, we don't really see a massive bear case, when we've been on the show many times saying, yo, like it's, like the valuation is getting up there, I think it actually matters when we say it.
Well, let's go back in the past. Why we were thinking, wait a second, the valuation now is a bit stretched, was because we saw the multiple exploding, the stock price exploding, but we were not really seeing evidence from the business side for this acceleration. Like we were looking, give us some signs that we need to trust that the stock price is rising, but also the dynamic behind the stock, so the business is actually set to improve. Because so far we got all disappointed from Carp initially saying 30% CAGR, and then we even reached like close to 15%. Like that feels bad. Okay, yeah. So we want signs to trust that this new growth trajectory is actually true. So, but now things are really, really changing. I think it is fair to say, and we don't really need to speculate too much here, that now the momentum is strong. Carp initially said, we have an unprecedented demand. I say, yes, but give me some signs, some real signs that is happening. And in the last 2 quarters, they proved that this unprecedented demand is real. A simple observation. If a company which was used to grow at 30% in the past before the DPO had like a spike in growth during the pandemic, the CEO tells you unprecedented demand, and the company just grows 20% or 50%. It's like, what the heck? What are you saying? So here, or you trust Carp or you don't trust Carp. But personally, right now, I don't really see very strong bear arguments on the business side. You can tell whatever you want. As a short seller, they say, oh, Palantir is an AI imposter and a glorified consultancy company. Carp is essentially carping everyone, proving everyone wrong. Now, on the valuation side, things go more complicated. And I think this is the only real angle with which short sellers can really try to hit the stock.
And I think they're also trying to come at the valuation. Like we saw that random dude that blocked you over the week, comparing it to Snowflake and all that stuff. I don't think they can make that, like, forget PE. They can't make a crazy case about valuation, because every analyst outside of Rishi and like maybe one other guy from Citibank, they all have us at $20 to $28. Like every single analyst. JP Morgan maybe has us at like $12. But if the street agrees on the valuation, if Snowflake fell, like the big thing for me that really made me feel comfortable about the valuation past couple of weeks, Snowflake fell almost 35% and they haven't recovered. Like Palantir has never flipped Snowflake for the past 2.5 years. Snowflake is a beloved company by Wall Street. Somehow Palantir is remaining in that $60 billion range, and Snowflake can't find liquidity to get higher into the 170s, like, which is a normal level for it to be at.
In the most important moment in a corporate life, like Snowflake, with this AI trend emerging, you change the CEO. Yep. You show that your business was used to grow very much, and now is set to grow like 20%.
It's barely growing as much as Palantir. It's at the same rate.
So come on, but Snowflake it should supposed to grow 2x Palantir, no? And then
dude, it feels so good to get vindicated on this one, because for 2 years, like that one was tough. Watching Snowflake be at some points, 75 billion, and Palantir stuck at 34 billion. It's like, what the fuck? What is the street smoking? Like, what? Like, are we idiots, or is the street idiots? It turns out the street was fucking stupid, dude.
You need to really understand how the financial world tries to go against you. And I love to say that I'm a former analyst who now, for as a living, I'm betting against analysts by and like I know the incentives, I know the structure, so I know where I need to look at. And for instance, something that I pay a lot of attention is okay, but what analysts are currently expecting from this company? And then I try to reason with my own head, because these are the estimates in terms of revenues that analysts have for the next 3 years. And we can see that despite this growth in the momentum, the momentum that the business is facing, analysts have adjusted the expectations in terms of margins. Remember, Mariana was surprised. Wait a second, this 5% additional margin, where it comes from? And that was AAP bootcamps. But in terms of revenues, they didn't adjust the estimates. They're still stuck to what they were expecting last year, which is a number that I feel very conservative. Like maybe we also have 2024 that doesn't move too much from here. But I personally think this 20% really, really underestimates the momentum and the strength of the company. The fact that the AI market in overall is expected to grow 23%, which means the implied expectation is Palantir to lose market share, while I expect Palantir to take a really massive market share, because we are seeing Google, Microsoft, all these companies that are supposed to compete with Palantir actually not having anything close to AAP. And now Palantir even is productizing itself, making it more efficient. So they are delivering value at scale. They're building knowledge on how to deliver alpha on scale. And there is like the perfect market conditions. Rates are set to decline. CEOs are now confident into investing in the business. Do you remember in the last year, I sometimes shared the CEO confidence level. In 2022, you can see the confidence of CEOs was very bad. Okay. And casually, also the investment in software were very small. Like you don't go big into big software projects when you as a CEO are scared. You are more on, even if you should invest more, you are actually constrained. The board tells you, okay, wait a second on the spending. But when the money is free and CEOs face an environment where they are incentivized to invest, look what happened like in 2021. You see this huge spike was driven by a confidence. Okay, we are going out of the pandemic. We have still free money. So huge digital transformational project, a lot of money also to the snowflakes. Everyone was happy. And then the CEO confidence declined with higher interest rates. You have this dip. But now confidence is emerging. And I think that is a true two component. On the one side, the economic outlook looks better. And on the other side, with AI, you have a shift in perspective on what you really need to invest. And now there is evidence.
Which is something that provides value, which is what Palantir is doing.
Provides hope and provides value. Hope, it is also important because by definition, investing as a retailer or as a CEO is hoping for a future that becomes better. Italy is stuck because we mentally don't feel incentivized to invest. But the beauty of Silicon Valley is we invest to actually get closer to a shinier, to a better output in the future. So this 20% expected from analysts is, in my opinion, really underestimating the strength of the company. But on the other side, for someone who's not really deep into the company like us, they don't really have enough substance to argue why this 20% could be an underestimation. So if you look at it purely numerically as a rigid financial analyst, you see 20% growth, the high stock-based compensation, you put maybe a higher WACC discount rate because you don't like the company, and it's overvalued. But these multiples, like a 55% free cash flow for a company growing 20%, is too much. Let's write a short article. Oh, the CEO attacks cocaine, but maybe he's the first drug addicted.
No, it's so right. It's so right. When you look at those basic, this is why you got to be deep into a company, dude. And I think this is what we're doing with this like stock community on YouTube and X is like, we could all just invest in the S&P 500 and go live our lives. The whole point is trying to find asymmetric opportunities in the market that require a differentiated point of knowledge. All of this is just knowledge, information at the end of the day that you have that someone else doesn't have. So if you know Palantir is sandbagging with this 20% year-over-year growth, or better yet, when the stock's at like $10 and you know when Karp says we don't have a pricing strategy and every Wall Street dude's like, fuck this guy, no pricing strategy, I'm never touching that. But you're a retail investor, you're like, actually, no. There's an argument here around providing value versus monetizing immediately. There's a 0 to 1 approach here. That's asymmetric. Now the stock's at 24, you're up more than double. And that's a big deal.
Think this way. When the Bear Cave wrote the article, like the arguments he brought out were actually interesting. Like if you didn't have the compounded knowledge that we are building, that report he wrote was quite convincing. Like it was true that Palantir had this consultancy component, but if you don't understand why that consultancy component is not truly a consultancy component, and why that in reality is exactly the moat. Like imagine being criticized for your key competitive advantage, which is what makes Palantir really ahead now compared with others, because they have 20 years of actually solving business problems rather than building a solutions that your salespeople just sell. That component changes completely the dynamic of the incentives, the culture, and at the end of the day, also the real customer satisfaction. Talking about which, you could have a Bear Cave number 2 showing some complaints about the salespeople. Maybe, let's say, maybe they interview someone very carefully, but at the end of the day, we have feedbacks like this one that I received, was reached directly by this person who's an important Palantir Foundry user. His feedback essentially is Palantir AP is crazy. I asked him, but look, could you give me a sense if you wanted to build this stuff? And he showed me that he was building apps for any kind of vertical. So not only the core business specifically, but also things more like operationally connected, like finance. Okay, so there were a lot of applications in the finance sector. He told me, look, it wouldn't have not, like, if without Foundry, I couldn't even start developing these apps. And I could, using this system is actually...
Yeah, I'll read the whole quote. I'll just read it and then you can talk about it. Using the system is actually addictive. It makes me want to build and click more. The way it's been made is fun and creative is enjoyable to stay in. It's not feeling like you are working, to be honest. It's crazy to think, but it's fun because you know how much benefit you are getting from building. It's also very satisfying when you have scheduling builds for your data pipeline, waking up every morning or every certain time period that your data sets are all up to date. And while I'm building, if I have a question or issue, I just ask AIP and it tells me the answer. It's crazy. Also, what's cool is to engage my colleagues. They tell me, oh, an app, this task I would do better with for help. So then I just set aside a few hours and build it with them. So they learn to see what goes into it. Then they own it and appreciate the more use cases to get stronger because the user is involved in the build. Thanks to the ontology and the low code, no code apps, I can pump on it. It's pretty good feedback.
Wow. And this guy is not a software engineer. I mean, this guy is a CEO. Okay. And he is having fun building applications. And the other colleagues are having fun building applications because it's like, as a business operator, you have the intuition of what works, what doesn't. And many times you think, look, if I had things set up in this way, my life would be 10x better. That's the problem. Between your intuition and actually having something that works, you have an IT person or more people, a department that don't really work with you.
Right.
So they can build a solution for you, but they don't really understand exactly your need. So it takes a lot of time, a lot of risk of actually building something that needs to be adjusted and so on. But if someone who has a deep expertise into the topic can build within hours and maybe in the future even less the applications they want, because they know they need exactly that information to deliver the best output in terms of business, then you must be excited. And then this excitement goes around also with your colleagues, and as a company you succeed because you get faster.